Good evening, guys. How are you today? Um, yeah, we shared a strategy the last time on VixPair. The same strategy is being useful on Nasdaq 100, and it's very nice to share with you guys. That's those that need something that works on Nasdaq. I actually combine it with this Ichimoku. This Ichimoku. Look at this Ichimoku line. It's a is a zone like a potential turning point for Nasdaq. You can see on most time frame. It depends on what time frame you're trading. If you're a 15 minutes trader, look at what I'm saying. It cannot be a mistake. Look at where it turns. Look at the turning point, and it has been buying since. So you look for buy. Now Nasdaq has been selling. Look at the entry that we got here, and I noticed something again that's turning to line chart makes you to it minimize your emotion. So what I do is that when I'm on my line chart and on this zone, I'm expecting a sell. What I wait for is this rejection. The fractals will give you the rejections. Look, it's different from your what do you call this thing? It's different from your candles. Yeah. It reduces the emotion. Let me see. Let's put it on candles. And look at candles. On candles, look, you will have gotten out when you see this, all these clusters. It's you will have mistaken it for something else. But and the emotion is there. Um, let's see this US 30. Let's see this. It should turn around there. You see, it should turn around there. Then I expect my take profits. TP1 should be somewhere around there. TP1 should be somewhere around there. Then my TP, if I'm trading on 15 minutes, will be somewhere around this line. So somewhere around there with my TP2. So it's very nice, and like I said, it's all about the time frame that you're using. So once it gets to this zone, I will lock my trade. You see, I locked one. I will lock the other one, but I'm waiting for it to pass this zone. But I prefer to use my line chart. It's removed the emotion from trading. Look, you see that? It turns here. I know it should retest. After retesting and I see this fractal, I enter again. Then this one will also come down. It will retest. If it's going, you enter on that one. So that's how you'll be doing that. And I don't know what's wrong with currency pair. I'm not getting currency pair right. But I like this strategy because my trade stop or my stop loss is always very tight. Look, this is my stop loss. Yeah. Then you should expect your take profit to be somewhere around. Yeah, at least take profit one should be somewhere around this line. Somewhere around there. This take profit one. Then if you go on your 15 minutes, you see your take profit two. So my other take profit will be somewhere around there. So let's see how the strategy works. On my main window, what I do is that I wait for the crossover. Look at this crossover. The crossover on this blue moving average, you see. These are my entries. So as long as it's on top of the blue line, it's a buy. Then now that it's crossing it down, I'm expecting a sell. So you can see what I've done today. It's the profit is very small on the it's a new challenge, it's a new FTMO challenge. Um, but you can see that it's really going okay. Let me close some of the trades so that I can make some more profits. Let's see, we do it like this. You close some. Yeah, let this one be running. So we close some. Yeah, and then you let those ones to be running. You let them run. Okay, so let's go to the setup. The setup is very simple. You have your fractal as usual. You have your moving average 50. That's exponential. 4. You have moving average 50 exponential low. The first moving average is close. Then you have your exponential moving average 9, green. And you have your exponential moving average 18, red. So the crossover of those things is what you wait for. Now the other thing I always use is that my Ichimoku, the one that I gave you in the last strategy, this one. I intentionally closed it because I was looking at something. Look at what I'm saying. Every time the market comes below this is why I got the entry. Every time the market comes below the Ichimoku, it's a sell. And if the market goes above it, like here, it's a buy. So as long as it's above it, you are looking for buy, buy, buy. Then when the market breaks it, you are now looking for sell. So this Ishimoku setting is like this: 15, 31, 35. You don't feel, no color, no color. You put some color here, you put some color here, then you leave no color on that one. Now this line is also my Ishimoku. This one, this line is my Ishimoku. This line that I said is a dynamic zone. You see, this line is a dynamic zone. You see. So for the fact that the market breaks this line now and is going down, expect it that Nasdaq is changing to a sell for now. It might come back to retest it, but it should go down. So this Ishimoku, I'm sorry, I'm not gonna give the settings out for now. It's just for the paid version. It's really much better for me to, like, I know what I'm saying about that Ishimoku settings. So let's move on to your window one. Window one is also very simple. When you see this blue line and this white crossing it over up, it's a buy. When it's crossing it down like here, it's a sell. I prefer to use 15 minutes and 5 minutes to confirm my trades. And look at this now. You see, look at it here. So my zone level, you zoom in finally. Look, this is your zooming in finally. Then you zoom out once. You see. So now you should close your trade because it's likely going to come and then before it drops. So let's see the setup. The setup is also very simple. I have my RSI 14, no color. I just need level 80, 20, 10, 90. 80, 20, 10, 90. Then I have my moving average 10 exponential blue. I have my moving average 11 exponential blue. I just want it to be thicker. That's why I make it like that. I have my starch 61.1, low, high, simple, no color, no color. Okay, no, white, white. I make it to be white, white, and there's no level. So that's the white line there is my starch. Then I have my envelope. My envelope is 500, 0, shift is 0, deviation is 200, method is smooth, apply to typical price, upper band is green and lower band is red. So, and the last one is your TDI. Your TDI is just to predict your precise entry. When this green line is crossing the yellow, the red line, and they are all crossing the yellow line, it's going up. This yellow line is the market baseline. Like here, when they're crossing this yellow line down, it's selling. You see, so it's your market baseline. But if TDI is giving me a sell and my moving average is here, of course I won't sell because my moving average have to be on top. Look at what I'm saying. I have to be looking for buy here because my moving average is down here. So when TDI gives me this and it crossed the yellow line, is a buy. So it's a buy, yeah. So let's see my RSI. I want to see something with this RSI. If I delete this 50, how will it look like? I've always wanted to do that and I keep forgetting. Okay, if I delete that 50, okay, it looks better. Okay, yeah. Then let's delete it. I have my RSI 13, 32, and 68 at the levels. I have my moving average 2, simple, previous indicator data, green. I have my simple moving average 7, previous indicator data, red. I have my Bollinger Band 34, deviation is 1.619, shift is 0, apply to first indicator data, the color is blue, 1 pixel. And I have the last moving average 34, simple moving average, first indicator data, my star is yellow. So that's that about the strategy. You need to practice over and over again. Look at what I'm saying here. Look, it will remove the emotions. Look at this. It's attempt to go up, but it's still coming down. Since it has crossed this my Ichimoku, I know that it should go down. Even if it comes back to retest it, I'll still be looking for sell. And moreover, the market is under this Ichimoku cloud now. So I'm looking for sell, not a buy. But I love this entry. Look at this entry. And look at my potential take profits on 1 hour. Look at my TP. This is my TP. Actually, it should still get here. It should get here. 14, 5, 12. Well, I think I've made what I want to make there. So let me just change it there. 14, 5, 12. Okay. You see what I'm saying? It's still, Nasdaq should drop. Nasdaq should drop. You just be selling when you see the pullbacks. You'll be selling on pullbacks. Look. That zone is such a lovely zone. That's my Ishimoku settings. Well, on H4, Nasdaq might still get here. Let's look at this. So imagine if you're an H4 trader and you have this Ishimoku settings. Look at how mad it is. Look at this. Look at where the market turns on H4. On this Ishimoku exactly. It goes up, You see fractals, you buy again. You see, you exit when it cross down. But since it is above this Ishimoku, you know you are looking for buy. When it cross this again, you buy again. You see, look at that. So on H4, Nasdaq is still buying, guys. So you need to be careful. But I love that entry. So maybe this is a pullback, maybe. But on H1, you see that it has crossed below this. So I like this set strategy because you can use it on any time frame. Look, if you're an H1 trader, it cross it, you're looking for buy, you buy. This also cross it, you buy, and you hold all the way. So yeah, currency is very funny. I use a tight stop loss, so it's okay. Let's wait and see. Yeah, let's wait and see. So that's that, guys. Enjoy. All the best.